Good evening, everyone. Moving on to the second panel discussion of the day on disrupting the status quo, the rise of fintech and digital finance. I think this topic is the most appropriate given the theme of the Finvision Summit today, the future of finance. Fintech today is available in all finance associated related fields like lending, payments, and transacting, accounting, everything. With this, I'll call upon our panelist and moderator on the dais, Mr. Gaurav Jalan, Mr. Anuj Chaudhary. I request everyone to kindly give a round of applause. CA Saurabh Nolakha and CA Anuj Parekh will be shortly joining us. They are on the way. In the meantime, I'll start with the introduction of Mr. Gaurav Jalan. Shri Gaurav Jalan is the founder and CEO of M-Pocket, an app-based lending platform established in 2016. M-Pocket specializes in providing small-ticket, short-term credit to undeserved youth, ensuring that funds are instantly deposited into their bank accounts. Before founding M-Pocket, Gaurav gained extensive experience in the finance sector, wherein he served as the managing director and chief investment officer at Avant Garde Wealth Management from 2011 to 2017. Prior to that, he was an investment analyst at Fidelity International from 2006 to 2011 and a senior associate consultant at Bain & Company from 2001 to 2004. Gaurav holds an MBA in finance from Columbia Business School. I'll request Ellen Mandana ji to kindly come forward and present an Utario and a memento to our panelist. Thank you. I'll now introduce our moderator, Mr. Anuj Chaudhary. He's a co-founder of Acae Advisory. He's a seasoned private sector development consultant with expertise in business regulatory reforms, investment promotion, innovation, and entrepreneurship. He has a rich background of collaborating with international organizations like the Asian Development Bank and the World Bank, contributing to impactful projects across India, Sri Lanka, Bangladesh, and various African nations. As the co-founder and CEO of Acae Advisory, Anuj helps drive strategic guidance and investments for tech startups in emerging markets. His career includes leadership roles at Accenture Strategy and EY, where he spearheaded large-scale transformation initiatives aimed at improving economic development and private sector competitiveness. I'll request Vibho Tandon ji to kindly come forward and present an Utario and memento to our moderator, Mr. Anuj Chaudhary. Since the two other panelists are on their way, I'll request Mr. Anuj Chaudhary to kindly take the session forward and we'll get them on the dais as soon as they're available. Thank you.
Welcome everyone and good afternoon. There is a bit of a change in schedule and we thought, why should we wait till the end to talk about innovation where the world itself is sort of embracing innovation? And some of the work that we do, we always talk to our clients and tell them that there are two ways to grow. One is you can keep learning and exploring, or the other thing you can do is just buy and borrow and just sort of, reduce your time to market. So I think we take this as an opportunity. Why wait for the last session? So we disrupted the schedule and we thought it's only app that we started earlier. Being in this fintech space for a while and working in several countries now, we keep hearing this digital stack in India and the emergence of fintech as an enabler of growth in this country. I think there is now talk about India growth being driven through fintech. There is an estimation of 2.1 trillion economy just by fintechs alone. And the fact that we have Gaurav and I have two more colleagues who are here, it'll be great to learn from them what has been their experience. In fact, some of them have been the pioneers of this transformative journey of the innovation that has happened. And maybe since Gaurav, you are here, I'll just start with, there are 4 or 5 segments I thought we'll touch upon. What has been the journey of innovation? What has been the change in consumer preferences? What technologies are these firms adopting? And what is the future, right? What all of us can adopt from this. What we understand sort of the driver for innovation has been this change in consumer behavior. A big part of the progress has been that there has been an adoption of technology. So just from your journey with M-Pocket, and I understand a lot of your consumers are young, so to say, on an average age of maybe 20, 25. So what are the changes you've seen, and how has that sort of impacted your business model over the years?
Thank you for having me here, to the host. And thank you, Anuj. I think we were supposed to be 3 of us panelists now. Looks like for the time being, at least, audience is stuck with me. But I'll try and answer the question to the best extent possible. So our business is effectively providing small ticket credit, which is specifically unsecured personal loans. And as you mentioned, we particularly focus on providing credit to what we call the underserved youth, right? These are people who, on average, our borrowers will have income levels of around, let's say, 30,000 rupees a month, right? So they're not earning too much money. They will be young, so most of our borrowers are under 30 years old. That accounts for the vast majority of our borrowing base. So for these kind of individuals, it's very difficult to obtain any form of credit. I mean, we all know how the credit system works, right? So if you want a credit card, if you want a loan from a bank, right? Typically, these kind of individuals will not be eligible because their income levels are not that high. Also, their income may be volatile, right? So by definition, someone who's earning, let's say, 30,000 rupees a month is not somebody who's in a very maybe stable job, right? So they might be changing jobs often. Therefore, so when you put them to that typical credit appraisal process, most of them will not qualify. So that is where the genesis of M-Pocket came about, right? The idea was we looked at the country and said, there's a lot of people out there who need access to credit, but they're not getting access. And I think the advent of smartphones, which effectively, one of the previous panels, Mr. Bandopadhyay was talking about how the bank is effectively now in your pocket, right? And I think that is what has opened up opportunity to create new business models. What we are doing, which is digitally delivering credit, would not be possible if the smartphone was not there and if you did not have the bank in your pocket. So specifically to come to your question, you asked about how consumers have evolved over time, right? I think if we look at our business, I think one is the willingness to adopt digital means of doing financial transactions. I think that is clearly something that has come a long way from the time that we started this business. So M-Pocket started in 2016, right, which is more than 8 years ago. So at that time, most banks did not have a mobile app, right? Whatever transactions were there were still on the desktop. So people were not used to, UPI came much later, so people were not used to doing transactions on smartphones, right? And that is the time when we launched this business. So from then to now, I mean, one thing obviously that has evolved is the willingness to just be very comfortable doing transactions on a mobile phone. Another thing that is very specific to our business is what we've seen is when we started this, again, the concept of a credit score, right, was not something that most people, and a lot of people did not even really know about it. The awareness was low. And even when there was awareness, the importance of it was not really that well understood. That has something that has dramatically changed over the years. I think today we would say that almost all of our borrowers are very well aware of what a CIBIL score is, why it is important, and they all want to actively build and improve and have a good credit score. And that is something that is very healthy overall for the country and the economy, because it means that people understand that you need good, consistent, behavior in the financial system, which means if you are taking credit, if you are repaying, you need to be consistent about it, you need to pay on time and things like that. At least that awareness is there. So those are my few observations about how consumers and consumer preferences have evolved over the last decade or so.
And just as a follow-up, are there unique sort of consumer insights for a young borrower, maybe at the age of sort of 30? What kind of needs are sort of they fulfilling from the borrowing that they're doing with you? And sort of how is it different from someone who's a traditional borrower who would go to a large financial institution? So where do you see is the difference, and do you see that to continue?
So, credit requirements and needs can come in various forms, right? So one is, when you need credit to finance, let's say, a large purchase or a large cost. For example, it's the typical ones we know of are, mortgages. You want to buy a two-wheeler, a four-wheeler. Bajaj Finance, obviously, over the last 15 years has made consumer durable financing the norm. I mean, today, I think most consumer durables are actually sold on financing rather than purchased in cash. So one is that form of credit, right, which is typically larger ticket credit, right? I mean, okay, on consumer durables, it can be lower ticket size, but typically these would be in the lakhs, at least, right? Then there is the smaller form of credit, which historically credit cards were kind of fulfilling that need. Credit cards and personal loans from banks, right? So these would be, when people were not doing a purchase, but they needed money for some other requirement, right? And it could be something, some kind of consumption requirement, or maybe it's even like, an education loan where you're looking to pay tuition fees for yourself, your child, etc. So I think over time what has happened is, I think what we see is meeting this need of a prime customer, a good customer had access to a credit card, has access to a personal loan from a bank when they want to meet these kind of needs, right? That suddenly a requirement has come up, you need some money, and you can go to a financial institution, get that money, or just charge it on your card. But what happens to the majority of the country? I mean, even as of today, even though credit card penetration has grown quite a bit, I think the number is there's only about 5 or 6 crore credit card holders in India out of a population that we know is about 150 crores, right? So the vast majority of the population does not have access to this facility. That is where companies like ours come in, and our model is specifically to provide, credit to short-term credit to people when a need comes up. And what do our customers typically borrow for? We see the top reasons are actually some health or medical related requirement, right? And this is something that, again, not everybody has medical insurance still in India, right? So it could be something as small as there's a medical test that the doctor has recommended. And we all know these are no longer cheap, right? Just getting a regular blood test could maybe cost you 500, 1,000 rupees. And when you're, or even more, and when you're talking about people who are earning only, let's say, 30,000 rupees a month, it's not a trivial amount of money maybe, right? I mean, that is one requirement. Second, we see is utility payments, right, of some sort. So your electricity bill is there. Your, for gig workers, we see, for example, they want to fill fuel in their two-wheeler, right? That's a typical requirement that we see comes up. Then education related is another big category where we see people having requirements. So these are all requirements that people normally would, pay from obviously their income, because credit ultimately is not income. You need to repay it, right? So it's not a permanent source of cash. But where it helps is, and where we come in is to bridge short-term needs, right? Because you might have volatility in your income. Maybe there's a sudden expense that you weren't expecting that came up this month. You don't have savings to draw into. And that is where, we come in. And effectively, I think we improve the lifestyle of people by them having access to a stopgap arrangement where they can dip in, get some capital for temporary needs, meet their need and then repay it.
Yeah. This is quite comprehensive. Maybe I'll sort of just come to you. Sure.
We have with us CA Saurabh Naulakha ji. I'll formally welcome him. He's the founder of Zen Statement. He is an accomplished finance leader, entrepreneur, and business strategist. Saurabh is the founder of Zen Statement, an AI-powered cash flow management solution that helps business seamlessly monitor, optimize, reconcile, and forecast their cash flows, particularly for industries dealing with complex revenue streams, multiple payment methods, and high transaction volumes. With over 17 years of experience in finance, M&A, business development, and IT-enabled transformation, Saurabh has played pivotal roles in scaling businesses. I'll request CA Indu Chatraji to kindly come forward and present a Uttariyo and a memento to our speaker. Sorry for the disturbance. I'll request Mr. Anuj Chaudhary to kindly take it forward.
I thought we had a relatively easier time of the day to handle the crowd. Now we have a bigger job because people have just come from lunch and all, and onus is on us to keep them awake.
That is
right?
the nature of innovation and disruption.
Well said.
Always unexpected. And Saurabh, we were just again talking about that there has been a spurt in fintech in the last decade in India. A lot of it is also thanks to, because there is a high degree of consumer change in consumer behavior, there is a greater degree of adoption. So just from your sort of perspective, what have you witnessed with these large complex transactions in businesses? What needs are emerging and what needs are you solving for them?
No, I think, let's first envision, right, that how has the transaction and how the way businesses are being done has changed over time, right? I think, old way of doing business, if you really see about that, right, it's more like two sides of a coin, right? So, I bought, you sold, you see something, I see something. That's about it. Two parties involved, right? Easy to handle relatively in all aspects, right? But when you look at the current ecosystem, and also by the way, so entire finance, internal finance management, right, was also built around that, right? So you have like the likes of SAPs of the world and the Zohos and Tallies of the world, right? All built from that perspective that you, at best, you have two parties who are working together for a transaction to happen. But as soon as you get into this current ecosystem, right, where the distance between your consumer and your business is kind of, getting shorter and shorter, and you are directly dealing with customer for all aspects, right? The complexity of transactions have changed a lot, right? It's more become like a Rubik's Cube, right? So many moving parts, so many different angles, 6 different facets, right? For every transaction. And, think about, let's say e-commerce business, right? Where an order comes through your, website. So you have your Shopify in the front end. Then you go on to the next part, you have a multiple payment gateway orchestrator first, something like a Just Pay and all, which does the routing for the transaction. Then you have your payment gateway. So 3 parties already involved. You go to the next level of it, goes into your warehouse management system. There is something happening in the warehouse. Then it goes through a logistics aggregator, where, it figures out that, who is going to finally deliver this product. Then it goes to the logistics. Logistics will probably attempt 1 time, 2 times, 3 times to deliver that order at times, and then it will finally get delivered. Probably if it's a postpaid order, they will pick up the COD. That's a different source of information, right? It'll come to your bank then. Then it might not always come complete, right? It might be, some deductions have already happened before you got the credit. And we are still talking about the same transaction, one leg of it. Imagine if it gets returned. You've got more facets involved. Somebody else will pick up the product. Somebody else, some different way, it will get refunded back to customer if it was a COD order, right? So many different parties are involved into one single transaction. That's a kind of a complexity we are living in, right? And none of these SAPs or Zohos or, tallies of the ecosystem actually solves for that well, right? And you can then extend it to somebody like, let's say, the business that Gaurav is in, right? the loan origination is not happening from one single source, for example, right? It could be coming in through some bank. It could be coming in through, some, regional partner. You're tied up with, let's say, probably some of the assumptions I'm making, but let's say you tied up to a local kirana store, right? That, okay, if somebody has the requirement, send it to me, right? And when that is happening, that you are also sharing the revenue with that kirana store, right? So much complexity, every single business. Take it to, a restaurant, right? Selling through the Swiggies, quick commerce, etc., etc. You take it to a travel. Every single travel transaction could have at least about 15, 20 moving points, right? Imagine just an airline ticket, right? Whether it's a corporate fare versus a regular fare versus a economy versus a premium economy versus a regular, whether I sold seat or not, samosa bhi saath mein becha hai ki nahi becha hai, even that will affect finally what commission do I get from the airline. On top of it, this is every at transaction level. Add to that the complexity around the volume. Okay, तुमने इस महीने में इतना बिजनेस किया है तो इतना, पिछले क्वार्टर में इतना किया तो इतना, and so on so forth, right? That's a world we are living in, right? And this is kind of making, I'm sure there are a lot of CAs here who would appreciate as well if they are dealing with such a customer base, right? They would understand just to be able to answer the question around what is my revenue itself is a nightmare in such businesses, right? Forget about everything else. What's my costs are, what my cash flows are, my receivable. Oh my God, even companies like Nykaa and Cred and all today cannot really tell you with confidence how much money do they owe you. Can you imagine that? That's a world we are living in, right? So it's very interesting times. A big transformation, opportunity for us as a fan. In fact, one of the CA partner I was talking to happens to be my ex-colleague from Deloitte about 20 years ago. He was like, yeah, this is the kind of a problem we are facing every day, and there is no way we can keep putting battalion of people behind this, right? You need to have automation in place. And I have not even started on the AI part of it, so sorry for the long monologue. But there are so many things for us to do, and I guess, finance as a community is probably in the best driving force here because they understand the money trail the best, right? So there's so much we can do together to actually simplify these, businesses and finance.
Okay, we have a full house here. Maybe I'll let Anuj's introduction be done.
Sorry for the interruption again. I now welcome CA Anuj Parak, founder BharatSure on the dais. He is the co-founder and CEO of BharatSure, a Mumbai-based insurtech startup established in May 2021. BharatSure specializes in providing infrastructure as a service solutions tailored for insurance distributors, including licensed brokers, agents, banks, and institutions. The company's mission is to democratize group insurance, making it accessible and affordable for organizations and groups across India. With this, I request everyone to kindly give a round of applause for our third panelist, C. Anuj Parekh. I'll request CA Neeraj Harodia ji to kindly come forward and present an uttariyo and a memento to our speaker. Thank you so much. I hope I'll not be interrupting again with this. Mr. Anuj Chaudhary, kindly take the session.
So, Anuj, the challenge with coming late is we pushed you the first question. So, we were just discussing that there has been an adoption of fintech in India in the last decade or so. A lot of this is driven by consumer adopting technology. So, from BharatSure's perspective, what have you observed from the consumers, and what do you see changing as well over the time? So what's been your journey around it?
Sure. So I would say the best part about all of us as founders here is that you don't need a legacy or a background to be able to start a venture into a sector that you don't belong. So information is available at fingertips. People at the helm are more than supportive to encourage new innovations. Talking about us as BharatSure, we are simplifying access to group insurance for employer-employee profiles. So largely SME focused group insurtech platform where we are enabling the ecosystem of brokers, banks, B2B techs. Now, the trend that we've seen is that, firstly, just to give a context, insurance is 1 decade behind, I would say, banking. And we've seen payments innovation being celebrated globally, followed by lending innovations. Then comes insurance and wealth management, but even wealth management is very well regulated and you're seeing good innovations there. But insurance has so far been always neglected in the country, whereas it's the first step towards anyone's financial security. So what we are doing is we are plugging in the gaps that today exist in the industry as a value chain enabler. You could say connecting the insurance manufacturers, hospital TPAs to the end consumer, which is employee of an organization who is part of the Bharat Shore platform. So our idea is that that how do we make insurance simple, jargon-free, and hassle-free for the end user? And the trend behavioral change that we are observing is that the new age consumer wants things which are genuine. It should not be that I am having a 10 lakh insurance, but when I'm actually going to redeem it, I understand that there are these terms and conditions attached. And that creates the trust deficit for a consumer to be invested in insurance product in the long run. We want to let consumers know what product they have been, you could say, made a part of through their employer. So what is that coverage that they really have even before that scenario or situation triggers? And in that situation where they actually need to make a claim, how seamless can that process be? We are in that age where UPI payment gets triggered in seconds. So can an insurance claim be also be triggered in, say, seconds? Maybe that day is far, but at least we can get it down to 1 hour.
Okay. And all of this innovation and disruption that all three of you have been through has sort of been led by technology. Maybe I'll, Gaurav, come to you. So for M-Pocket, we've heard about blockchain, we've heard about AI, and then now Gen AI. What technologies are you adopting maybe to better assess risks while lending to customer or other parts of your business? And how do you see that changing as well in the near future?
So being a fully digital business, I think technology is obviously core, like it would be for the other panelists as well. It's core to the business, right? So effectively for us, if the tech does not work, the business stops, right? And when it comes to, so that is one layer of kind of technology. It's basic like having an office, like having staff, in that sense, technology is the equivalent for a digital business. Then on top of that comes the intelligence, right, which is I think what you're referring to. So in our business specifically, I think there are two areas where we're using AI and machine learning technologies very heavily. The first area is underwriting. I mean, that is core to any lending business, which is evaluating the credit worthiness of a customer, which basically means what is the probability that they will pay the money back. Because obviously you don't want to be in the lending business where people are not paying you back, not a very good business to be in, right? So, and that especially with again, with a customer base like ours, it is a non-trivial task, right? Because by definition, we are, targeting customers who don't have a very good kind of formal footprint, right? So the typical thing that is looked at is, income proofs and civil score, right? I mean, these are the two things that lending decisions are mostly based on. I mean, even though, there might be a laundry list, but for a traditional kind of loan, 95% of your decisioning will be these two things, right? Now in our case, yes, income is there, but again, it's volatile. So, how do you actually assess the stability of that income? And secondly, a lot of our customers are new to credit, so they would not even have a civil score. So again, how do you assess these customers, right? So that is where, machine learning comes in, we use a lot of alternate data. Right? So I'll give you an example. I mean, SMS data is a very rich source of data in India, right? We all know any transaction that we do will generate an SMS, right? Any payment that is due, that is overdue, you typically get an SMS. You do a debit or a credit in your bank accounts, you'll get an SMS. If you are, buying insurance, your premium is due, you get an SMS. So it's a very rich source of data. How to use that information intelligently to actually make an underwriting decision is where these AI and machine learning technologies come in. And then the other part is really fraud detection, right? Which is any business, you have people who are trying to kind of break the system, right? And especially in lending, it's very common because if you can create a fraud account, if you can somehow take money and then you don't have to give it, it's effectively like, kind of stealing the money, and you don't want that to happen. So that is where AI comes very useful, right? Because it's about pattern recognition. And also you cannot really make this rule based because fraudsters don't follow rules, right? And it's a continuous game where the methods that fraudsters will use will keep evolving. And therefore the systems that you use to try and detect that fraud also need to keep evolving. And inherently artificial intelligence is built in that manner because it's a learning system, right? So I think these are two areas where we use kind of technology intelligence very heavily.
And maybe just a follow-up, because there is also this concern about being biases, and sort of from your firm perspective, because a lot of your consumers are first-time borrowers. So how do you ensure that when you're adopting AI, there is minimal bias in the system?
Yeah, so this is a very good point actually. And the only way to do this is via continuous experimentation and optimization of your models, right? So there is, again, no perfect way to remove bias because it's inherent in the process, right? What you need to do is you need to, build a system initially, monitor it, see how it is working, and then if you detect bias, you then work to correct it. And again, it cannot be a one-time exercise. It has to be done on a continuous basis. But yes, I think it's very important because any kind of, no matter what use case you're using artificial intelligence for, just the very nature of it means that there will be some sort of bias. Now, how important that bias is, how important it is to correct, that becomes subjective. I think going forward as AI becomes more and more prevalent, there are just two use cases. Sorry, I'll just take a minute more. Because these are the two use cases that are most prevalent in our business currently, but going forward, we can see the use of AI becoming much, much more prevalent. Like, for example, we run call centers, right? Digital business, again, if you want to reach out to our customers, there are times when you want to speak to them. So right now, there are humans who are doing these conversations. But the way technology is evolving, we are already doing, trials with companies that are literally having voice-based AI, so that you are actually talking to a machine and not a human. And this is it. The quality would astonish people. The person on the other side will not be able to tell that it's actually not a human, right? So we are almost like 80% there. I think in another couple of years, I think most of the voice human interactions might be replaced by AI. Yeah.
And just again, sort of from your perspective in terms of decentralized finance, what role does technology play, and sort of what technology are you sort of banking on, and do you see that change in the near future?
So, by the way, before that, I actually want to call out one of the comment that you mentioned, right? Is that you don't want to lend where people don't repay, right? And I was like thinking, okay, that's fair point, but I think we do pay income tax, right? But nonetheless, I think, coming back, see, I think when we are in the business enablement space, right? Like we are not really doing a lot of front-ending activity with the, users per se, right? We are in the enablement space for such new age businesses, right? Now, from that perspective, when you break down the technology, right, I think the core thing that we miss today, right, is that how does the technology help us in the transaction layer, right? If our transaction layer is not sorted well, right, or not understood very well, everything else we do on top of it, will also be garbage in, garbage out, right? So when I break this technology, okay, when a company or when a business evaluates what kind of a technology interventions we need to do, where should we prioritize, right? It goes back to the fundamental part. Let's fix the transaction processing first. We have a better control on that layer. Everything else gets built on top of it, right? So, for example, if it's a business which is into, let's say, lending space per se, right? So what you want to make sure is that the way, lending underwriting, etc., is being done, the way money is going out, the way money is coming in, the way money is getting attributed to an individual loan, etc., is first sorted. Because everything else will get built on top of it, whether it is the reporting side of it, whether it is the accounting or analytics side of it, whether it is the compliance side of it, right? All of these things get built on top of it. So when you think about internally creating this, technology stack, that's how you layer them up, right? Fix the foundation first, build on top. In fact, even the AI piece of it that you mentioned, right, Gaurav, I think the foundation still remains the same, that how good is your data input, how good it is the context of that data, right? Whether it is understood very well will determine the, the output of the AI agents per se, right? So again, you go back to the foundation that, okay, is my transaction layer good enough, right? Everything else gets built on top of it.
And sort of just again coming to you, Anuj, now, being the stepson in this fintech space, how were you using technology to sort of develop maybe tailored financial solutions for your client, and what technology do you leverage on? And again, AI being the buzzword, are you seeing sort of use cases for AI in InsurTech?
So I would say that you need to be accessible to the user in the moment of emergency, and you need to educate the user well on back from that previous conversation that we were talking of, that on what their coverage terms really are. So what we have done is we are working on that effort, not that we've launched, that we are launching an AI-led chatbot where user can ask any question around their policy coverage, and we can give them a simple answer which in the format that he would easily understand with examples. So, and it could also be as simple as get me my e-card, which is the nearest hospital to me if I want to undertake this treatment. Is this treatment covered under insurance? What does this capping mean? So the more aware the user is, the more invested will he be in the concept of insurance. Unfortunately, when I reflect back on this segment or sector, we have limited education around this subject. We have never been taught in schools or our academic careers in colleges that what are the basic nuances of insurance. How is fire insurance different from a health insurance versus a life insurance? Even basic concepts like it's a benefit based cover or an indemnity cover. One pays you to the tune of your actual cost of damages, and the other one pays you a lump sum amount on an event triggering. So it's a intersection of logic, math, and I would say law. And this is where I believe that we have all got it wrong over the years. There's only been mis-selling because A, we've not been able to attract good talent, and B, there's limited awareness among the users. So imagine an unaware user being sold a product by someone who is not even equipped to sell. So our first step was always that how do we make sure that our teams are internally equipped so that they can educate the user on what they are really buying. And then the next step is that making the entire journey accessible by way of a platform, an app, and soon to launch an AI-led chatbot. But now we are at least responding each and every call within, say, the first minute of the user reaching out to us. So you have central omni-channel help desk through which all the requests get tracked, recorded, transcribed, so that we have a complete audit trail. So I guess we have at least reimagined how insurance is delivered till date. AI-led innovation is yet to happen, but yes, we've interestingly tailor-made certain products. So we are seeing gig platforms evolving around us, the likes of Uber, Zomato, Swiggy. So there, unlike a traditional insurance program which could cover them on an annual basis like employer-employee relations, for contractual workers, we have a monthly, even daily insurance program. We've also sachetized embedded insurance for a sports fitness app where a user who's playing a sport at the venue and if he gets injured, he can get covered for that number of hours. So an hourly based insurance is something also which we are further sachetizing. So we are trying to, on one end, cover the market for the insurance programs they've not accessed till date. On the other end, we are also curating programs to suit the evolving business needs of the platform economies.
Okay. Maybe I'll take a pause and see if there are any questions before we move on to the next segment. We want to make it a bit more interactive. Can some... Maybe I'll hand you the word.
My question is to Gaurav sir. Sir, we all remember 2008. So at that time, loans were started given to people who were not getting loans anywhere. So they were started to be given loans for, especially for real estate. And then due to the competition, risky loans were given, which led to 2008 downfall. And now we see in past few years, so many startups and fintech companies have come up, which also have started giving loans to people who were not getting loans. And there are so many startups that there's a rush to reach number one. So what do you say that how can, for that, in the rush to become number one, we don't start giving risky loans, triggering what triggered in 2008? Because now we are giving personal loans. Earlier it was real estate loans, mortgage loans, which were comparatively more secured. So what's your view on this, sir?
Sure. So the 2008 financial crisis that you are referring to, it mostly was focused and originated in the US. It was not really a financial crisis in India or other emerging markets, mostly US, to some extent Europe, but even that was a knock-on effect. I mean, it was a issue where subprime borrowers in the US, specifically on the mortgage side, were able to get much more credit than what the system later realized was more than they should have been given, and that led to inherently there were multiple layers of leverage that built up in the system, and it was not only at a borrower level, right? Even at the intermediate layers, there were a lot of funds, there were banks, they became over leveraged. So it was that's what I think, just to give everyone the context and make sure we're on the same page, that is what had happened, right? It was not an India-specific issue at all. Actually, in India, there was no kind of borrower level issue, but obviously because this happened in the US, and the US is the largest player in the global financial system, the entire world felt the impact of this. Now coming to, whether your question was, are we in a similar situation in India, or is there a risk of a similar situation evolving in India given what has been happening? So I think we need to look at the context, right? What is again the level of leverage in the system, and what is the amount of risk that is built up? I mean, inherently giving credit to people who previously did not have credit does not mean that you are increasing risk, right? Or increasing systemic risk, right? It depends on the US at that time in 2008 was already a very mature financial system where almost everybody who needed access to credit had access to credit. What happened is then people got much more, so someone who should have got 100 rupees, maybe they were able to get 300 rupees, right? And that was the essence of the problem. In India, if you look at the statistical data, the macro data, India is still at very low levels of leverage, even though that has grown a lot over time, especially in the last decade. For sure, the household leverage has grown, but it is still at relatively low levels definitely compared to the US, but even compared to other emerging markets like China, even Indonesia, Thailand, other countries, right? So from a purely statistical and macro perspective, I do not think it looks like India has a problem of over leverage. Whenever an industry grows rapidly, there is a chance that a certain segment will get over leveraged. So I'm not saying that has not happened, but I mean, what has also happened simultaneously is that in India, the RBI has been very proactive over the last year and a half in trying to control this growth, right? So net, I don't think today we are in a place where there is any kind of systemic risk, right? In terms of, leverage spilling over, definitely nothing that comes close to the 2008 crisis. Individual companies, yes, we've seen the microfinance sector, specifically in India, has been going through a kind of bad loan cycle, right? Where in that industry in particular, I think the loan growth was very, very high over the last few years, and we are seeing some of the effects of that play out. But I think outside of that, at least as an industry participant, I would not think that there is any sector that is very over leveraged. And I think over time, household leverage in India will continue to increase, and that's a natural cycle that goes along with GDP, per capita GDP growth. So I do not think in India it's going to be any different.
And maybe if I add, I think I would say on the contrary that the access to formal credit in India is still almost in single digits. So it's very, very low. Also, in terms of housing loans, which is what led the downfall in US, even in India, we are still fairly behind in terms of mortgage against loans. The main reason is that our land records are not right. So often when you go to a bank, you don't have the right property papers. In fact, the most commonly used mortgage in India is gold. So rather there is space for more innovators like them to come. And before we have this problem where, India, I don't think it's going to happen in the near future. There's still a long way to go.
I think the point, right? I think it's just, it's not that the people who were not getting credit earlier, they were not getting credit in some sense because there was no easy way to actually assess their credit eligibility. That is where a good innovation is happening. And if that is what is you're solving for, you're in a good place. If you're not doing a credit evaluation well and it's just kind of lending, then your concerns are valid.
I think there was one more question. Tarun, I think you had a question. Sorry. No, okay. So if there are no, maybe we'll move on. There's a lot of this innovation in India. The regulator has also played an extremely important. I think both, I'm sure Bharat and Pocket sort of regularly interact with the regulator as well. So what do you see is there a collaboration now with the regulator in terms of solving for more innovation? How do you see that role also changing over time? Maybe I'll start with you, Gaurav.
So I think financial services is a heavily regulated industry, right? And that is the case globally, and that will always, it's been the case historically. I don't think that is going to change. And for good reason, right? Because, the consumer does need protection, and there need to be certain guardrails, right? Now, inherently, regulation and innovation, there's an inherent kind of conflict is maybe a strong word, but there's an inherent kind of trade-off there, right? Because regulation by its very nature and by its very objective is trying to put guardrails in place because they don't want people, to move beyond certain boundaries, right? And they want people to operate within certain boundaries because if they move outside of those boundaries, kind of, the consumer could get impacted, the system could get impacted. And there's a lot of uncertainty because of how the financial system is typically interconnected, right? Now, innovation, by definition, is about breaking boundaries. It's about doing new things, right? So somewhere a balance needs to be reached, right? Where how do you innovate, but at the same time, regulate? And this is a larger kind of policy issue, right? I think in India, we've done a reasonably good job in general in balancing innovation and regulation. Most of our regulators, I mean, we obviously as a company, our primary regulators, the RBI, I think, each industry, for example, for you it will be IRDA, etc., right? So somewhere it will be SEBI. But so speaking about RBI in particular, like RBI has an innovation hub that they have created, right? Where they have sandboxes and they allow certain types of innovative business models that can be assessed without regulatory scrutiny, and then depending on how it plays out, it could be moved into the formal, the regulations could be created around that. So, so I think again, it's always going to be about finding that balance, and it's never straightforward, right? So in finding the balance, sometimes you will tilt too much on one side, sometimes you will tilt too much on the other. But as long as there's an active debate in society and in policy making circles about the need for innovation, I think we'll find, hopefully we'll find that balance.
And maybe because there are CAs in the room, there is also sort of demand for compliances from the regulator. So where do you see there is room for sort of streamlining some of those compliances as well? And innovation can sort of further improve those.
No, I think, look, compliance is, so there are two things here. One is the regulators kind of setting, guidelines and policy, and, the compliance requirement is an outcome of that. So I think once there is a certain regulation, I think the compliance itself is non-negotiable, right? You then cannot say that, okay, the regulation is there, but I choose not to comply, or it's optional to comply. So I think, the question here is that how can the regulations be potentially modified or optimized or changed so that maybe compliance kind of does not put too much of an obstruction in the way of innovation or growth, etc. But as I said, that's a larger question that I think at a policy level needs to be considered. And then regulations, and that has happened in the past, right? It's not, if you look at the regulatory environment in India, it's never been static. It's continuously evolving, right? So regulations are changed, they are modified. And I think the compliances kind of change with them, right? One good thing is that obviously a lot of things are moving online. That does help streamline the process to some extent, reduce the time spent behind complying. But beyond that, obviously, compliance needs to be there because that is the way the regulator tracks whether people are following the rules.
And what about you, Saurabh? Do you see a role for the regulator in the space that you work? And also sort of them to play a collaborative role in innovation? Or you prefer that the regulator rather be not involved?
No, absolutely. I think, see, when you look about simplifying business and simplifying finance, right, I think there is no way to work independently per se, right? And I think, let's say we work very closely in the payments ecosystem per se, right? And the kind of a work, let's say NPCI and all has done in this space is phenomenal, right? In fact, nowhere in the world, in fact, just 2 days ago, I was meeting a friend of mine. She's been in Dallas for about a decade now, right? And she was like, यार ये इंडिया में क्या हो रहा है? हम लोग तो अभी भी US में we keep all carrying this credit card and cash and all that, and यहाँ पे तो phone से ही सब कुछ हो जा रहा है, right? That's a kind of a space we have come into, and without the regulators and NPCI kind of a bodies coming into picture, that won't happen, right? In fact, we're also exploring something around the way we have these P2P payments, right? We are also exploring the B2B side of the payments also being enabled with something like a Google Pay, right? So as a company, let's say I will have a Google Pay kind of account, right? And I can operate all of my bank accounts from that same platform, right? I don't have to separately log into Punjab National Bank or SBI or ICICI or how many ever banks I deal with, right? But on single one platform, I'll be able to do this. Now, these kind of innovation are not possible standalone. कितनी बैंक के पास जाके आप ये integrations का करोगे? There is, I can tell you this solution does not exist in the, the single platform which give you access to multiple banks. There's not even a single solution out there which gives you maybe more than 3 or 4 such accesses, right? Without government and these kind of a regulatory body coming in, these innovation, these solutions are not possible. You want to reach to the mass scale, it's essentially important to be working with them. Take ONDC, right? Another such example, right? So I think there is no downplaying the role of it, but of course, while they show the path, we still probably as a startup ecosystem, we have the legs to be able to run faster on that, right? So it's a collaboration working both the sides, right?
What about you, Anuj? Do you also embrace sort of the regulator, and how do you effectively collaborate with IRDA per se in maybe developing new products or sort of having more innovative ways to go to the market?
So IRDA has called out its vision very aptly clear that by 2047, on the 100 years of independence, they want every person to hold a health, life and home insurance. So they want insurance for all by 2047, and that's the goal. To be able to do that, they are creating enabler provisions through which insurance distribution or even insurance innovation can be simplified. Classic example, earlier every new product that an insurance company would innovate would have to be first be filed with the regulator. They would approve and then only you can distribute, and this itself was a 1-year process. Now IRDA has prescribed a use and file approach, that you build your product and you file it within same day or 24 hours, they'll approve it. So you can go ahead and manufacture products the way you want and just let the regulator say okay to it, that okay, you've kept me informed of it. So you are seeing now programs like motor insurance where you are no longer buying insurance for the year. You can even buy insurance, say if I'm driving only 10,000 kilometers a year, I can buy an insurance for 10,000 kilometers and then I can top it up. Say if I'm buying a health insurance in personal capacity, if say my health vitals show that I'm healthier, I'm walking say consistent number of steps every day, so they can have discounts based on the customer's health profile. They can encourage customers to become healthier. In a way, we are solving the larger cost of preventing people from falling ill. So that is just one example. They have also enabled NHCX, National Health Claim Exchange. Today, all insurers speak on all different platforms for their health claims processing. So now there will be a universal national health claim exchange where all insurers, TPAs will be part of one single platform. There will be one single single format of claims form that all insurers will use across the board, even the hospital insurance desk. Imagine the friction that gets eliminated with something like this. They have also talked about Bima Sugam. What Bima Sugam would do is something what NPCI did with UPI, that they'll create a standard framework of insurance APIs under which all insurers have to list their retail products. And then there will be buyer apps on the top who will subsume that APIs and then distribute it to the end user. An agent can also then directly just collaborate with Bima Sugam and distribute, or he can collaborate with a buyer app and distribute. But today, say Policy Bazaar has 1,000 engineers to just solve for their tech. That number will come to 10% once Bima Sugam goes live. People will become more efficient with such you could say fundamental structural changes that the regulator is planning. So we are at the right side of the regulator evolving and enabling the ecosystem. Of course, we need more, you could say, people within the regulator to be able to move things faster. But yes, they are moving steadily is what I can say. And we are at the forefront of adopting any new changes that the regulator is introducing.
And you have a joke around this, right? Like I think regulators and NPCI kind of bodies are doing so much. हम लोग क्या करेंगे आगे जाके?
And so, is there then space for collaboration? Sorry, is there a...
There was a question there?
Yeah,
Yes,
I
please.
was having a question for Anuj. Like you said, the group policies and all which are coming up, like in your platform and others, in the screening which used to be there before, when we used to apply for any insurance, and what is happening now in group policies. Like yesterday, I was checking the app, new Tata app. There I am entitled for some motor car insurance without any document, without anything, just because I am a member. And suppose then I have to claim, or suppose I have the credit card with which I get insurance for all the travels and overseas. How do you see that the user get benefit or notified even that I'm aware to entitle at the time of need, or there are no apps or any tracking like we have the UPI apps or other apps where we know where the credit shows these are the benefits you get in your this credit card. But all the policies that I may be having 10 policies, say office policy, personal policy, health policy, travel policy, but all together in one place like the regulator place where we get it, and I'm entitled or I'm aware, or what should be the right one as per my profile, which I should or which I can, but I am not aware or not knowing where to go by. Sugam, what you said for insurance is coming up sounds cool, but then where is the bridging mechanism in between what should be and what is there?
So something like the problem statement you mentioned, that you are not even aware of what all different policies you have. So for that also, IRD has announced e-insurance account. So by that logic, every new policy that is issued after 1st October 2024 has to mandatorily have an e-insurance account number attached. And then logging into that e-insurance account number, you can check all your policies. It's going to happen in a phased manner where at least new policies will start getting issued with that e-insurance account number. But say old policies will also eventually get migrated with an e-insurance account being tagged to it. And then on the top of it, you will have account aggregator, which will pull not just your investment, but also insurance records. So institutions will also interchangeably get connected to each other. So we are not just talking of insurance, but even your investments, everything gets centrally mapped. And I guess, yes, things are moving in that direction, but the implementation is where at times there are challenges. And for example, ONDC has not kicked off the way it should have, right? So I guess with time, people will realize what are the inherent gaps of different structures and frameworks. Maybe it will reformulate itself into different shapes and avatars. Not that even the government will get it right each time. Maybe we'll have to give them time for things to evolve by themselves.
Is there that Bharat taking care of your, other than health insurance, other general insurance are you covering?
So we largely cover group insurance, which we call as health, accident, and life insurance for employer-employee groups. And once employees are on the platform, they also get access to, they also get access to retail insurance, say motor, travel, life, health. So we have targeted human-linked insurances for now, but yes, we will evolve into other general forms of insurances like fire, director, officer liability, commercial general liability. So these are products that are not really meant for SMEs. We just want to take that first step in letting the easier products get first distributed, and with time we'll evolve into other products. But yes, the point is that no matter it's just us, anyone who is powered by us should be capable to distribute. We are not looking that we want to be the policy bazaar of this market. We want to be the enabler of this market where everyone who's associated with us should be able to distribute.
Just as a follow-up, so is there then space for collaboration in this ecosystem with large incumbents, or do you see them as a competition?
I would say that 2020, post-2020 era is all about collaboration. You cannot own the value chain yourself. Each player has to eventually fall in place that I can create a win-win by collaborating with each other. And there are a lot of, so all the innovations that we see post-2020 are, say, API infra-led, where infra enablers are making it easier for new businesses to get launched. And no code was in talks. Now AI is in talks. It is only making easier for people to launch their own business. So we are seeing a lot of micro businesses around us. And India is also moving into that direction. I keep telling people around that everyone eventually is going to be a micro entrepreneur. Even if, say, someone is working in a job, 9 to 6 job, 6 to 10, he'll work on his own venture. So I believe that every person inherently will move in that direction because it's increasingly easy to start and build a venture. There are a lot of infra tools available with you to just help you get there. And many of us will start pursuing passion projects and turn it into a profession.
Okay. I see Rajiv is in the room, so maybe we'll do the last round. Just maybe to summarize, I'll start with you, Gaurav. What are the top 2 or 3 innovations that excite you in your space?
I think there's a lot of thing happening around using, innovative data points to profile customers, right? So we're seeing, and again, there are a lot of companies that are doing this in some form or the other. So maybe using like social media footprint to try and profile a customer, because again, if someone is new to credit, etc., you want to know something about somebody. On what basis do you make any kind of decision, right? So I think that is one area. The second is in the area of fraud. Again, as I mentioned, that's critical to a business like ours. And I think there's, again, a lot of innovation happening there because just given the numbers involved, I think, fraudsters have a lot of incentive to do fraud, and therefore to, prevent that and stop them, I think it's not one company that can do it all, right? So you have to keep looking at, who's doing interesting stuff and use those solutions. I mean, these are two areas that I can think of, but otherwise, I think there's practically innovation in every space, right? As Anuj was saying, I think, artificial intelligence is very real, and it's going to impact what a business looks like and, what people can do in a very big way, because a lot of the things that today are, barriers kind of will go away, because you'll just have these tools and AI agents that will do a lot of the work for you, whether it is, making a mobile app. Today, that's a barrier, right? You want to start a business, build a mobile app, not very complicated, but you need to find a vendor, you need to find somebody, you need to work with them. Now, what if that process becomes like a half-day process where you don't even have to write anything? Maybe you're just having a voice conversation with a AI chatbot, and they're kind of real-time making the app for you, and you're saying, change this in the screen, change that. This sounds like it's not really fiction. I mean, this is literally going to be reality a couple of years maybe from now.
One of the wish lists that I had on my sort of radar is I don't need to write emails. Can I talk to someone and someone just sends this email, right? And this is not a distant reality. I think it's almost happening while we speak right now.
Absolutely, absolutely.
Not even talk, I would say. There'll be instruments which will read your mind.
Okay.
And what about you, Saurabh? So what are your sort of innovation priorities for your firm sort of going forward?
Yeah. Before that, maybe I have just a quick question. We have about 30 odd people over here. How many of you are practicing chartered accountants, and probably any other bucket of the folks here? That's interesting. Still a very small subset, right? Probably about 5-10 of you, right? But I think, from our perspective, since again we are in the enablement space, right? Our primary focus is to be able to simplify finance, right? And when I say simplify finance, there is a lot of, and pardon my word there, but there's a lot of manual work that is being done by the internal finance folks and also the CA firms on behalf of the businesses, right? I think that is the primary disruption area, because, the way the finance folks' life starts, right? Like morning 10 baje, and we heard a lot of examples, right? Where we used to have those big, Bahikata books and all that. I think it's only has become digital, but the same kind of a load still exists for the finance folks, right? So the idea is that to be able to simplify this data processing part of it for the finance team, whether it is around the, the revenue side of things, whether it's around the bill processing side of the things, that is where a lot of disruption is happening, including the application of the AI. So we are working with the AI agents for bills processing, right? Agent will be able to source the bills, validate it, three-way recon, etc., validate it against the contracts that are existing in there, validate against a lot of, let's say in case of, the data existing in some other system, procurement, this, that, being able to validate all of this and say, okay, these are the 95 things which are fine. These are the 5 things where you want the, the best of the best minds to actually look at, right? That's a journey we want to enable. That's where our focus area is. And I guess there is, again, to the point, right? It is a reality. It's not a dream anymore, right? I literally, in about morning half an hour time working with ChatGPT, I actually created my entire US GTM piece step by step for the next 3 months. What are the things that I'm doing, including where I'm traveling, when I am traveling, which events I'm attending, what flights am I going to use. Took me about half an hour to plan for my next 3 months, right? So it is a reality, right? And, finance is going to be behind if we don't catch up, right? So, yeah, looking forward to interact with the best of the community here to simplify finance.
And again, what about you, Anuj? What are your sort of top 3 innovations that you're excited about that you feel is going to impact your space going forward?
So, we've been talking about, and that's the core theme of this summit as well, that AI is fundamentally going to change the way we operate, period. Everything that we do today will only become 10x or even say 50x, 100x more efficient. something that you would have spent maybe 1 week has been reduced to half an hour. So I guess it's matter of time that we all evolve and adopt newer form of technology into our day-to-day operations. And yes, teams will only become leaner. That is what I believe. The leaner you are, the more agility you will have while building a business, and that is where we see that as a great advantage, that you don't need multi-billion dollar resources to scale. You can scale by help of the new evolving technologies. And second being that blockchain, while it is not as much now talked about, but it will also come into action very soon. We will see applications of blockchain for fraud prevention, detection, because more AI builds, there'll be more level of frauds as well, right? You could even deepfake anyone. So I guess with time, we'll see both these technologies evolving together, and we'll live in a better world.
And that's a great note to sort of stop this conversation on. If there are any more follow-up questions, we'll be happy to take. We'll have maybe 5 more minutes till Rajiv puts up. But I think just to summarize, just a show of hands, how many of us use Gen AI for any of our day-to-day work? So there is fair bit of adoption. I think the way we look at innovation is a tool to bring efficiency and productivity. It's not necessarily something that is going to take away any of our job. It's just going to make whatever we do more efficient and maybe create more opportunities that we had not thought of earlier. So thank you once again, panelists. If there are no more, there's one question there.
Today, the data which is there, I think all of us, whether it's Zen Statement, whether it's M-Pocket, whether it's Bharat Shore, we all have our data on the cloud. Even when we use ChatGPT or Gen AI, I think we are exposing ourselves to a lot of data online. For example, most of us would be probably uploading contracts on ChatGPT and ask them to put their comments across. It's, of course, somewhat an invasion of privacy, or we are violating some of the NDA laws which we are entering into with the respective entities, we as professionals. So how do you foresee going ahead with fraudsters or scamsters or hackers coming always ahead of us sometimes, and with these data privacy as to how our concerns being addressed as customers or as users of data?
Maybe, Saurabh, you may want to start with that first.
Yeah, no, I think very, very valid concerns, right? Like, there were, in the earlier times, we'll talk about, ISO, SOC 2, etc., right? Those have become not an optional thing, but an hygiene, right? Like, I think, I've worked with the businesses where we were handling data, but, to get to these SOC 2 or other InfoSec related guardrails, it will probably be about, a priority for a third or a fourth year kind of a setup, right? For Zen Statement, for example, because we deal with a lot of financial data, we practically went ahead with this in the first 6 months itself, right? So I think that's not an option anymore, right? But it does not, it's not enough as well, right? I think the way when we talk about, as soon as you go into the AI space, right, there's a lot of work that is required around ring fencing this data, right? That, how much amount of an interaction or processing you do in-house first before you reach out to any of these external LLMs, etc., right? So, that is a kind of a innovation work that, companies like Zen Statement and all have to do, right? So that the amount of information that goes outside is already filtered, already, let's say, encrypted, already, tokenized, right? So that the information that you send out is actually, already secured, right? So it's not that, see that all, and like, for that matter, right, even you as a business should not be putting contracts and all directly into the GPTs per se, right? So I guess we're not there yet, I'll say. There's a lot of work to be done, but it's not an option, right? And I think until then, we have to keep the queries a bit more generic rather than just simply, uploading the financial data or the contracts into the GPTs per se.
I guess you should, any one of us should use any of these new tools responsibly, So if say we are using any AI solutions for say even drafting contracts, it has to be redacted. There is no question about us using sensitive data over there. But yes, I guess we have to meet up with the security expectations of our stakeholders while using these solutions.
Gaurav, since we started from you, any final thoughts on this?
No, just to add, I think the other panelists have already mentioned most of the points. I think what the system will also evolve. I mean, anything new, initially it's a bit of Wild West, right? Because people are trying new things, they're still figuring out it's innovative, so people don't even know exactly what can be done, what it will be used for. But as things kind of mature and as usage grows, generally, things kind of will fall in place in the sense that I'm sure in time, you talked about redaction. I'm sure the LLMs might just give you an option saying, when I upload this document, do the redaction by itself. There might be like 2 settings saying like only use redacted data and look at the clauses, but don't, redact the information of who the parties are in a contract, for example, right? Also, I think in terms of, data protection laws, etc. I mean, maybe you will be able to specify that this, which location this data should go into. There will be local LLMs that over time for certain use cases you can put on your servers. So I think all of these things will happen. So I think while it is important, I think it's a natural evolution, right? There's nothing kind of unusual about where things stand now. I think they will evolve, and I think, regulators will come in, they will put in the guardrails, people will also start using them a certain way. I think, in agreements between parties, for example, in an NDA, I'm sure in some time you'll start specifying, saying how this data can be used with regard to artificial intelligence, what can be put where. So that's how I see things playing out.
If there are any more questions, no. Thank you, Gaurav, Saurabh, and Anuj for participating in the insightful discussion. I think we end on time, so a big round of applause for the panelists.
For the insightful and engaging discussion, I will request CA Rohit Prasad to kindly propose a formal vote of thanks.
Good evening. Good evening, everyone. Thank you. It's truly an honor to stand before you today to deliver the vote of thanks for this enlightening panel discussion, disrupting the status quo and the rise of fintech and digital finance. A heartfelt thank you to our esteemed panelists, Mr. Gaurav Jalan, Mr. Saurav Nolka, Mr. Anuj Chaudhary, and Mr. Anuj Parekh for sharing their expertise and invaluable perspectives. Your insights have truly enriched our understanding of fintech transformative power, whether it's a consumer financing related to use of artificial intelligence, whether it's sharing your journey, your mission steps to reach your vision. So a big round of applause for all the panelists for sharing their insightful discussion for the day. Thank you so much, sir. Thank you.